Ever since it went public back in 2010 at only $17 per share, Tesla has been a battleground stock, with so many analysts, hedge fund managers, private equity managers constantly coming out on CNBC, Bloomberg, Yahoo Finance and other media and saying how ridiculous the valuation of the stock is. Meantime, Tesla stock just keeps creeping higher. So in this video, I want to answer one important question. Can Tesla shares, even at 800 plus, be a good buy, and will its stock eventually go to 1500? Or the whole thing is just a pipe dream and the stock will drop back to 150 where some people say it belongs? I will discuss reasons why Tesla may reach 1500 or why it may drop way below current levels. It's a heated bull-bear debate that may unlock new value for you as a potential shareholder or sway you away. And if you like this video, give me a thumbs up, subscribe and write me in comments what you think of Tesla stock and what you're planning to do with it. Let's start! Tesla electric vehicle, solar energy and battery storage businesses have attracted a passionate base of followers, especially in social media and among millennials who are very environmentally conscious. But as for the stock, a lot of investors are in dire disagreement. First point, and probably number one reason for controversy between bulls and bears of Tesla stock, is its controversial CEO Elon Musk. Very few CEOs, dead or alive, can match his achievements. Musk's vision for Tesla was revolutionary for the entire auto industry and is changing society and consumer habits today. What a lot of bulls like about Elon Musk is that he puts his money where his mouth is. If he wants something done sooner or later, he actually does it, no matter what challenges stand in his way.
I said we'd do them, we did it. Said we'd do it, we did it. And sometimes I'm not on time. But I get it done. And the Tesla team gets it done.
Musk is a visionary, and his main goal is not even to make great cars, but to change the world. At the same time, a lot of bears argue that Musk's erratic behavior is the reason to sell the stock. For example, May of 2018, at one of the company's conference calls, Musk called a Wall Street analyst a bonehead. Then in July of the same year, he had a random Twitter feud with the diver that took part in a Thai cave rescue. Then in August of 2018, he had been involved in a legal battle with the Securities and Exchange Commission over the tweet about the deal to take the companies private. A deal that never materialized. Things got so ugly with the Securities and Exchange Commission that they have demanded to remove Musk from management. However, a federal judge asked the two parties to put on their reasonable pants and reach an agreement. Musk did settle the lawsuit, agreeing to step down as a chairman and have the company's lawyers pre-approve written communications, including tweets with the material information about the company. But that behavior was just the beginning. Later in the same year, Musk appeared on a comedian Joe Rogan's podcast for a 2-hour conversation in which he casually smoked weed and drank whiskey. Not to mention his recent feud with Alameda County officials when he had reopened its electric car plant in Fremont in defiance of Alameda County's health orders. Frankly, I do agree with him on that. Nevertheless, Tesla's board knows that even with Musk's erratic behavior, many investors are staying on board due to the cult of Elon Musk. A lot of people believe in Musk's entrepreneurial genius and admire his unorthodox nature, and so they're willing to give him leeway where they wouldn't to other executives. So I have to pencil it in as a win for the bulls. Second controversy that investors battle over is Tesla's true technological advantage over competitors. Bob Lutz, who is the former vice chairman of General Motors, he also worked at BMW, Chrysler and Ford, and one of the biggest Tesla's critics once said, Tesla has no tech advantage, no software advantage, no battery advantage, no advantages whatsoever. In one of the interviews with CNBC, he had this prediction for Tesla's Model 3. They will never make money on the Model 3 because the cost is way too high. He's got 9,000 people in that assembly plant producing less than 150,000 cars a year. The whole thing just doesn't compute. It's an automobile company that is headed for the graveyard. Besides that, a lot of Tesla's bears are saying that the competition in EV market is going to increase, and that may spell trouble for Tesla. For example, Toyota and the Japanese battery firm Panasonic, which is also a partner with Tesla at the Nevada Gigafactory, announced that they will form a joint venture to develop and build prismatic battery packs that will power electric vehicles. Meanwhile, General Motors and South Korea's LG Chem are spending $2.3 billion to build a battery plant in Northeast Ohio. Well, the bears have made their case. Now let's see what the bulls have up their sleeves. First of all, Tesla made a significant change to its electric motor strategy with the introduction of the Model 3, switching from an AC induction motor to a permanent magnet motor. No other company has an electric motor on the market that comes close to performance ratio of the Tesla's Model 3s. It reduces the entry price for electric vehicles while not making any compromise on range and performance. But where Tesla has its biggest lead over the competition is batteries. And that lead is only getting bigger. Just recently, Tesla has filed with the Chinese government for approval to sell a new version of the Model 3 with cheaper lithium iron phosphate batteries, which could further reduce the price of the car and make Tesla eligible for China's electric vehicle subsidy program. Tesla is the only automaker to use cylindrical battery cells in its battery packs. Cylindrical cell battery packs cost $158.27 per kilowatt hour. Other automakers use battery packs that include pouch or prismatic battery cells. Those battery packs cost on average more than $200 per kilowatt hour. Tesla's success in building more powerful batteries and at lower cost has forced other automakers to announce they will spend billions of dollars to get into the game. But Tesla's battery technology and the mass production scale it can ramp up with its 4th Gigafactory, which is about to be built near Berlin, Germany, gives it a competitive advantage. Speaking of competitive advantage, what about Tesla's supercharger network? As of right now, Tesla has over 16,000 superchargers at over 1,800 supercharger stations around the world. And they are not slowing down, but adding more. And these are fast charging stations where you can usually get most of the charge you need in about 30 minutes. Autonomous driving is also shaping up to be a very popular feature in Tesla's cars and years ahead of competition. Tesla began building its own chip 4 years ago and has developed an autonomous chip that is at least 3 to 4 years ahead of any other AI automotive chip manufacturer, including NVIDIA. Not to mention the possibility of the autonomous taxi driving network. The idea behind that is that owners would register their cars with the network and rent it out for a certain number of hours into the network, therefore creating additional income. If that happens, that makes Tesla cars not a liability but an asset. Can you just imagine before going to bed you just register your car with Tesla taxi network and let your car drive around and make some money for you while you sleep? I haven't even mentioned their solar business. So overall, Tesla has a huge and sustainable technological advantage over the competition. Therefore, I have to put another one for the bulls. Sorry, Bob Lutz. Third and final point of controversy between Tesla's bulls and bears is the stock price. Bears are claiming that the stock price is way too high, unrealistic and unsustainable. Heck, even Elon Musk himself tweeted that Tesla's price is too high. With the market cap sitting around 150 billion as of this timing of this video, Tesla is now larger than General Motors, Ford, Fiat Chrysler and Honda Motors combined. It's now the king of US car stocks. Tesla is also very close to surpassing time-tested giants like McDonald's, Nike and Netflix in the market cap. Many bears and well-known Tesla short sellers like Bob Lutz, David Einhorn, Jim Chanos and others argue that despite its valuation, Tesla has encountered numerous production hiccups, and Musk's foray into solar via Solar City acquisition has been a complete disaster. They say that the only reason for this parabolic rally in Tesla shares is the massive short squeeze. As you may know, short sellers are investors that bet against the stock, hoping to profit on a downward movement. But when a stock goes higher, they have to cover their position and buy back shares higher to close the trade. It's no secret that Tesla is the most shorted publicly traded company, and since losses aren't limited for short sellers, their need to cover may only be fueling this uptrend. However, Tesla's bulls like Colin Rush of Oppenheimer or Kathy Wood from ARK Invest argue that although the current electric vehicle market segment is about 2.2% of the total vehicle sales, the anticipated growth is massive. Recent projections show that EV sales are expected to surpass those of traditional vehicles by 2038, while the global fleet of EVs is expected to surpass 1 billion by 2047. Over the next 5 years, ARK expects sales of electric vehicles to total about 1/3 of all auto sales, with Tesla's share at about 18%. Let's do some arithmetic. Total cars to be manufactured in 2025 is expected to be in a 110 million units range. According to ARK, Tesla's share would come out to be around 6.6 million units, which is approximately 400 to 450 billion in sales. That's an enormous number. The whole Tesla's market cap is sitting at 150 billion, and all of a sudden that number seems like a bargain. This is the table that shows the number of Tesla vehicles delivered per year. As you can see from this table, Tesla's delivery numbers grow almost exponentially. Even though 2021 and 2023 projection sounds a bit optimistic to me, considering global crisis, those are still massive numbers and a very impressive growth trajectory. Also, Cathie Wood and her company ARK Invest estimates that autonomous taxis will cost 1/10 of a traditional taxi today, which would be very attractive to consumers. Frankly, if that scenario unfolds, I'm kind of worried about Uber and Lyft, because if we have Tesla cars picking up passengers without drivers at a fraction of the cost, who the heck would want Uber? These savings and conveniences, according to Cathie Wood, will translate to $2 trillion in equity market opportunity. Wow, 2 trillion? That's a bit much even for me, Cathie, and I have to believe it when I see it. However, even 1 trillion of an opportunity sounds pretty good to me. Also, Tesla's other businesses such as the battery business and solar business are no slouches either. Yes, I have to agree with the bears that Tesla's Solar City acquisition was in fact a disaster, but even that business had been on a comeback path lately. Overall, the bulls don't believe that Tesla should be valued as a car company, but as a technology revolutionary, ready to change just about every facet of life as we know it today. I have to agree with that assessment and add another point to the bulls. Tesla stock does seem expensive at first, but if you evaluate Tesla's business parts with long-term numbers and take a long-term perspective, you would come up to a different conclusion that Tesla stock is not expensive, but rather cheap, even in the $800 range where it trades today. And I hope you like this video, guys. Please subscribe and write me some comments about Tesla. I'm always eager to hear from you. Until next time.